Hi, I'm Adash. One of my staff calls me the Wizard of Accounting, and now QuickBooks wants to make a commercial about it.
Hey, Adash.
Ah, hello, team member Janice.
I've just finished reviewing this month's profitability. Can you come and check it?
I'm looking at it right now.
You already have it?
QuickBooks Online Accountant lets me see everything, Janice.
Neat. What else can it do?
QuickBooks Practice Management reduces non-billable hours, so you can spend more time on profitable work.
Bit of a whiz, aren't you, Adash? Can you teach me to talk telepathically too?
You already are, Janice. I suppose I do feel quite magical sometimes. If I was a book, I would be a QuickBook.
Good morning, everyone, and welcome to our March Pro Power Hour. We'll just give everyone a few seconds to dial in, and then we'll commence the hour in the show. My name is Steve Kemp. I'm the Head of Financial Institution Partnerships for Australia and Rest of the World at Intuit, and I'll be your host for today's session. It's great to have you join us today, and before we begin, I'd like to acknowledge the traditional owners of the land on which we meet today, and to pay my respects to elders past, present, and emerging. In today's Pro Power Hour, we're talking about cash flow, the major issue for small business. We're going to look at some of the tips and tools to help you work with your clients who want to better manage their cash flow. We're also going to hear about how Commonwealth Bank's Stream Working Capital solution can help you and your clients, and we're very proud to have recently launched our partnership. First, a little about us. I'm sure everyone on the call today is aware of Intuit's flagship product, QuickBooks Online, given that it's used by over 300,000 accountants and bookkeepers and more than 5.1 million small businesses around the world. Some of you, though, may not be aware of the functionality in QuickBooks Online Accountant. It helps smaller accounting and bookkeeping firms to manage their clients, keep on top of their workflow, and help with tracking your time and billing. Next slide, thank you. Before we get started, let me take you through some housekeeping. We've had over 300 people register for today's event, and we will have a Q&A session at the end of the presentation. So if you have a question, please submit it through Slido, and we'll aim to answer as many questions as we can. Today's event is being recorded, so we'll be providing everyone who registered with a copy via email. So watch out for an email in your inbox that will let you review any of the content shared today or share it with other team members. If you're having technical difficulties with not being able to see or hear the presentation, we suggest restarting your device, refreshing your browser, or trying a different device. You can also navigate to the troubleshooting guide located at the bottom of the page, which contains a link to an alternative video browser. Again, you will receive a recording of the session, so while not as good as the live thing, you won't miss a thing. When it gets to demo time, to see the screen better, we recommend you maximize the screen by clicking on the expand icon, but please note, it takes a moment for the screen to render. So if the screen appears blurry at first, just give it a few moments to clear up. Finally, we'll be running a couple of polls during the webinar. It is a great way to get involved and to hear your thoughts. So keep an eye out on the polling section in the bottom right of your screen. Now that the housekeeping is out of the way, let's move to today's exciting session. Today, you'll be hearing from Amanda Newton. Amanda leads the accountant, channel, sales and marketing teams across 160 countries for Intuit's Rest of the World portfolio. Amanda was formerly an accountant, registered tax agent, and co-founder of a suburban accounting firm specializing in small business advisory and tax compliance. Amanda has first-hand experience in leading change, having transitioned her own practice from server-based software and hourly rate style engagements to a cloud-based and package pricing model that's centered on customer experience. Amanda is passionate about leveraging her journey as a practitioner to advocate for solutions and experiences that empower accountants, bookkeepers, small businesses, and the community they serve. We look forward to hearing from Amanda. We also are pleased to have Mark Cleaver from CBA with us today. Mark is the head of Stream Working Capital Solutions, CommBank's new digital self-service working capital solution for small businesses looking to unlock the value of funds tied up in their invoices, particularly the unpaid. And as I said earlier, I'll be your host today. So my name's Steve Kemp, and I lead our partnerships with the financial institutions across Australia and our West of World business at Intuit. Now, I'll be back at the end of the session for the Q&A, but for now, I'll hand over to Amanda. Thanks, Amanda.
Thank you very much, Steve, and it's a great pleasure to be with you today and to join in with Mark and talk about the critical nature of cash flow and small businesses. I'm passionate about many things, but I'm very passionate about small businesses and the relationship they have with their advisors, and of course the importance of cash flow and how critical that is to the success of all involved. I'm really looking forward to the tips and tricks that we're going to be able to share today, and of course, recognizing that one of the key things in my role of being sales and marketing leader for the accountants channel across the globe is that it's really interesting to realize that the critical nature of cash flow for small businesses and that important role of advisors is truly universal. What's often different in my experience is the tools, the systems and the processes that really power these insights and make it as efficient as possible to really generate this kind of information for our clients. As Steve mentioned, I spent a decade as a public accountant, and so I know only too well how transformational these tools can be to provide these sorts of insights, and of course, how critical it can be for small businesses to be able to make real-time informed decisions. So without further ado, let's get stuck right into it. So we know that accountants and bookkeepers have been at the forefront of helping small businesses really grapple with the ongoing uncertainty in all the sectors of our economy. And the advice that you've been giving to your small business clients really is pivotal to managing cash flow and helping them be as resilient as possible during these times. The majority of small businesses, around 60%, have experienced cash flow issues at some point during their company's history. And unsurprisingly, this has occurred for more than many in the last 2 years. And yet only 30% of these small businesses are proactively seeking help from their advisors and really improving their cash flow situation. And I think that's quite shocking. In another couple of slides on, we'll talk a little bit about what small businesses are telling us about why they're not reaching out for this type of help. So you know only too well as advisors the impact that cash flow issues can have and how wide-ranging it can be, and the weight in small businesses personally who are facing cash flow. And of course, that's without that ripple effect, that this kind of stress that can be felt, because it impacts far and wide on relationships, families, futures. And so cash flow problems really are among the top 3 causes of stress, with 76% of small business owners saying that they are experiencing it or have experienced this level of stress. So it's important. We know that, small businesses know that. So when you dig into the causes, unsurprisingly, it's a decrease in sales or margins that was reported to be the main contributor. So they're selling less or they're really feeling the squeeze of costs. And it really is a sign of the challenges being faced by small businesses in a post-pandemic economy. It really has been 2 speeds, some that have really felt that impact, and we know that there are some sectors that have thrived. But for the greater majority, particularly those that existed prior to COVID times, the impact is certainly been a change. And unfortunately, those challenges just aren't stopping after their sales have been made. More than a quarter of small business owners, around 27%, said that not getting paid according to their agreed terms is a primary contributor to the problems that they face with cash flow. Now, we know as advisors that payment delays of even 1 day can have a substantial impact and a material stress to some businesses and sectors. And if we take that by days or maybe weeks, the impact truly is material. And of course, finally, the more time that small businesses spend on managing their money, we know that that's less time that they're spending growing their business, investing for the future and being able to focus on opportunities that they have ahead. So what does this mean for their business? Well, again, You know this, you see it every day. When cash is short, it can impact businesses in many ways. It can strain the relationships they have with their suppliers. It can affect their ability to access credit, and Mark will talk a little bit about that. It can result in taking on more debt to cover expenses or using personal funds to do that, so increasing their risk. It can make it more difficult for them to grow. It can make paying wages difficult, leading to unhappy employees and increased staff turnover, and ultimately insolvency and potential exit. And again, that's just simply looking through the lens of the business and not the ripple effect that it can have on those employees, their families, and more broadly in their communities. Nobody wins when cash flow is a challenge in small business. Last year, we conducted research and gathered insights from more than 500 small business leaders and explored their relationship with their advisors over this past year. And much of this will likely resonate with many of you, but according to the report's findings, 57% of small businesses say they simply wouldn't be here without the support of advisors like you and the work that you've provided, which is outstanding. And that support extended far beyond financial advice. And for half the small businesses we spoke to, that really extended beyond financial advice. Again, I'm talking to those that are experiencing it. You know full well that it wasn't just financial advice that small businesses have been relying on. It's emotional support, it's directional support, it's connections through to other assisting parties as well. So it's been much greater than just simply financial advice. 30% of those small businesses did specifically call out that they relied on advisors to interpret and access those government supports available to them. And as highlighted earlier, 30% of those small businesses relied on assistance for cash flow. But again, 60% have struggled with cash flow and haven't engaged with an advisor. And so we know that there's space to be more proactive, not only encouraging small businesses to engage, but ensure that advisors, you understand the tools and systems and processes available to you to make this efficient and well functioning. So let's take a look at the advisors who have helped small business clients with their cash flow. Those results were tangible. Almost 2/3, or 59%, of small businesses surveyed have an extra $500 to $40,000 as a result of working alongside their bookkeeper or accountant. And 5% of those have made $60,000 or more thanks to the help of their advisors. Over the past year, over half of the small businesses, 52%, have saved up to $6,000 thanks to the advice of their advisors. Small businesses with an advisor relationship are now 3 times more likely to feel positive about the start of a new financial year and tax preparation period than those without. And more than half, 57%, say that they would have struggled to keep going without their bookkeeper or accountant support over the past 18 months. So I want to pause and say thank you. You've obviously been doing it tough, and like everybody over the last couple of years of the pandemic, but really the extra lengths that this industry is taking to help small businesses have had a huge impact. We know how powerful you are as a community, and we recognise that you were born for a time like this, and it truly has been shining through. So it's clear that those as advisors, that has been a critical and important role in helping clients with their cash flow. So today we're going to have a little bit more of a look at how you can go about providing that help and touch on some of the tools in QuickBooks Online, including the cash flow planner, so that you can make that process easier. If you're not using QuickBooks Online, what we'll cover will still be applicable to your clients, no matter what solution they're using. So now, before you can advise your clients on how to adapt to a changing condition, you really do need a clear picture of their current state of business. Generating a cash flow forecast can help you determine how long your clients can really maintain business operations, given their typical patterns of cash in and cash out events. The last 24 months have been anything but typical. However, you're going to need to apply some more flexibility than usual while being realistic about potential challenges that may face the business in coming months. And of course, then you can use the forecast as a planning tool to evaluate what-if scenarios based on potential adjustments to revenue and expenses. It's a great way to put a line in the sand, start some conversations, and then adapt based on the inputs of the small business, but of course the things that you know too from the tools that you've got available. So before we get started, just a quick disclaimer. So this content is for the information purposes only and really should not be considered legal, accounting, or tax advice, or a substitute for obtaining such advice specific to your business. Intuit provides no assurance that the information here is comprehensive in its coverage or that it is suitable for dealing with a client's particular situation. And accordingly, the information provided should not be relied upon as a substitute for independent research, and you should naturally verify statements before relying on them. But let's get going. All right, so now if your client's using QuickBooks, you'll be able to run each of the reports mentioned in the following sections in QuickBooks Online. Excuse me. But again, the same overall process applies regardless of which solution they're using. Before you start, we want to make sure that all the transactions are reconciled and the books are clean. Now, we know that books are clean can be a loose term, but we want to make sure that we've got everything up to date, up to scratch, and as much information as we think we can get access to start from a clear baseline. And to put that forecast together, you'll need data from a couple of different reports within the system. First, we'd suggest running a profit and loss report for the past 3 months to really understand the average income and expenses for each month. For income, we want to focus on those top sources of revenue. And on the expense side, we want to pay particular attention to payroll, rent, insurance, marketing expenses, to name a few. QuickBooks users can use Open Invoices report, so you'll be able to see the anticipated sources of cash as well, and also run the unpaid bills report to identify expected short-term cash outflows. And after you've sort of analysed that current cash situation and developed a forecast, you really can focus then on identifying the best ways to help clients adjust to how they manage their cash flow. So you might have different ways about doing this. This is what we've gathered from our advisors. It's really the best way to move forward and use the tools in the most efficient way. It's most likely that you'll want to implement a couple of different approaches, both to increase money coming in and decrease what they spend. Ultimately, that's the enhancement and optimization as an advisor we really do want to have a look for. And as you did with the forecasting, you can use the data from our QuickBooks reports to come up with a recommended course of action. Sometimes to increase the money in, it's good to work with the client and look at what options there are to speed up existing revenue streams or find new ones that can give clients an infusion of cash that they can use immediately, continue running their business. Yeah, we know sometimes when you're really in the thick of it as a small business owner, maybe they can't see the obvious. Never overlook the obvious. Perhaps it's that clear sense and guidance that they need to really consider what it is that they're doing. And of course, the other side of the equation is really what can we do to be accelerating accounts receivable? If you're using QuickBooks, it has several reports that you can use to quickly identify which customers have an outstanding balance and who owes the most. You and your clients can then come up with ways to manage these accounts to increase the cash on hand. What types of data collection processes might get optimization out of the sources of payables available. And obviously to see which customers owe the most, the Open Invoices report in QuickBooks Online is the best way to do that for a detailed breakdown of how much each customer owes, the due dates, and to check the customer balance detailed report. So it's all there at your hands. Obviously, the less the client spends, the longer their cash reserves are going to last, right? So there are several strategies that can help clients manage their expenditures and have an immediate effect on their cash flow. Much of this is going to be familiar to you, but it's a nice reminder of some of those levers that you might want to be able to pull that are going to be right for your client. And of course, not all answers are going to suit all clients. It's about which is going to be the right situation for your client's particular needs. Generally, they're going to fall under a few key categories of lowering or deferring payments, cutting back on discretionary spending, and often the one that's mixed is how you're managing inventory, particularly if you're a products-based organisation. How do they ensure that they're not locking up their cash in inventory that sits on the shelves or doesn't move in a timely way? So to lower those payments, you want to look at reducing fixed expenditures, the terms for the current bills, and then options to defer loans and taxes. Let's have a look at those in a little bit more detail, just to give you some ideas of things to be considering. I know when I look at reports, and I'm sure it's the same for you, those large monthly expenses are really easy to identify. And obviously lowering those can have a substantial impact on the cash of the business. Things like rent is normally going to jump out at you, and you can use the transaction detail by account to really filter in any distribution accounts for rents or leases and see the average monthly expense in QuickBooks Online. Insurance can be another big expense, and the transaction detail by account report will also help you see the monthly insurance expenses. And of course, payroll. In some instances, this is going to be a large and consistent expense that needs to be factored in for cash flow. Usually, your employees are the least likely to grant extended payment terms, and so critical to ensure that you've got the cash in space for that. It can be most helpful to really start with the bills that are already due, and suppliers may be flexible on timing if you can offer payment terms. And sometimes there's some room there, and I'm sure we've all noticed, some can be more flexible than others. I think, as I mentioned earlier, that snapshot of the due and overdue bills, we recommend you use the unpaid bills report in QuickBooks Online. And to see how much your client owes each of these suppliers, it's nice and simple on the expenses by supplier summary report. And of course, our advisors feed back to us that you're looking at options to defer loans and taxes. We know that the tax office can be a big debtor, and to ensure that you're working with them about what those payment terms may be a source of cash relief in the short term. There are a wide range of expenses that often your clients are going to have control over. And so focusing in on those controllables is going to make this process more efficient. Identifying items that aren't necessary, either in the short term or not at all, can help them alleviate some of that stress around negatively affecting their cash flow. If your clients use direct debits for their bills, you might want to suggest that they turn it off until you prioritise the spending, and so that you've got some management and all those levers necessary to manage what money is available. But of course, you want to be cautioned around late payment fees or stretching suppliers beyond their terms. Reoccurring expenses, if you want to keep an eye over those expenditures, they can be considered sometimes whether they're really needed in that short term. And you may be able to cancel or suspend supply orders, marketing subscriptions or memberships. And you can find potential savings by identifying those recurring transaction patterns. We recommend you use the transaction list by supplier report in QuickBooks Online to get a list of those regular occurrences. Marketing and advertising, there's a saying that sometimes the best time to be advertising or marketing really is when your business is in challenging times. But again, thinking about what the return on investment of that's being for the business. Is this the right way for them to be spending in order to grow, and what adjustment might sit into that space? Sometimes that can be the trigger of where they invest more money, but it may not be the right place if they've got to forego suppliers and the critical needs to keep the business flourishing. And of course, the classic meals and entertainment. When you're under cash flow stress, some clients might need to reconsider some of those spends as to whether that's the right place for them to be managing their cash flow. Importantly, what these processes is trying to do is really give an efficient way for you to be raising the real-time data attached to their business in a way that your small business clients can then truly understand the landscape and the terrain of their business. It's very often that small businesses will have a gut feel of how their operations are going by the money that's in the bank, but maybe not have clear foresight as to what the expenses they'll need to cover in the future are going to be. And all of this process does is it really brings it to a tangible light that you can then start to have those powerful conversations to help them understand the impact of the decisions they're making today and what that does for their future implications of cash. So now that we've worked through the process and some of those reports that can really save you time to give a detailed picture of that cash flow position, I really want to give a quick highlight to the tool that can help you get a view of the cash flow and really apply that what-if modelling. And that's the QuickBooks Online Cash Flow Planner. It uses that historical data from the accounts that clients have connected to QuickBooks Online to help forecast the recurring income and expenses. tracks their bills with their suppliers' credit terms, and lets you move the dates when payments are due to understand the impacts of these transactions on your client's cash flow. Setting up the cash flow planner is straightforward, and it lets you fine-tune your forecasts and add that hypothetical money in and money out situations to get a better understanding of what your cash flow can be for up to 15 months ahead. This is an incredibly powerful tool. All the things that we've just discussed, this is the right modeling to help you do adjustments with your client in real time so that you can see the impact of what happens when they do make the movements that you've suggested, or what happens if things do change and by how much. And it consolidates it in one real-time overview that makes that advice powerful and makes it a collaborative experience with your clients. Every transaction syncs right into the dashboard of that cash flow planner, so you can monitor all of your clients' business balances in one place. It covers the bank accounts and credit cards, the sales and invoices, expenses, bills and payrolls, GST and tax, and of course the customer's details. It uses your client's bank and QuickBooks activity to predict money in and money out for 1 year ahead. And the great thing is the adjustments that you're making, as I said, really, they don't affect the impact of the actual QuickBooks file. They allow you to play that what if scenario out and really just test the robustness of some of the suggestions that you're making or some of the options the business have. It doesn't impact the chart of accounts or your online banking transactions. It's a sandpit for you to test those reporting options. Knowing where your client's business is going means that you can help them budget wisely. They can be ready for anything, and you can set a plan together and keep iterating as things often come out of the woodworks and change what it is that you're doing. With a better understanding of your clients, the finances and the cash flow situation, you can use that plan to really consider, what are you writing off on bad debts? What were you doing with your suppliers? What are those payment plans that you're going to try and go about negotiating? What are those other solutions in the market that you can be using to free up cash flow? What is the expectation of growth? What are the new activities that they're going to go and seek out? This is one solid way to kind of put that plan into action in a centralized way that both you and your client can be across in real time. So that's a little bit about the tools, the process, and of course, don't forget that the small businesses really are crying out for this kind of support and the true impact that you can continue to make nice and efficiently off a platform like ours. But I'm going to hand over to Mark now from Commonwealth Bank, who's going to help talk to you a little bit more about how the banking can play an incredible role in helping fund cash flow for small businesses. Over to you, Mark.
Thank you very much, Amanda, and thank you everybody for the opportunity to speak to you this morning. We're very proud of the new strategic relationship that we've developed with QuickBooks, and we're really, really excited about the opportunity of speaking to you as a cohort of valued advisors to QuickBooks customers. I'd just like to set out what we're going to be talking about today. I'll need to start just by putting on the normal disclaimer slide. You'll forgive me if I don't read this one. It's slightly longer than the one that Amanda read out, but it is available within the slide pack, which I hope will be available to you later on after this presentation. So if we just move on to the next slide, we just give you an idea about what I'm going to spend the next 20 minutes talking about. I really wanted, first of all, to paint a picture. I wanted to paint a picture of what CommBank is thinking about in this current era, this post-pandemic, and the past 2 years that we've just gone through. Banking is changing, and the banks need to change, and that's what we're doing. And I just wanted to paint a little bit of a picture on where CommBank is moving in relation to the changes that have been going on. I want to spend a little bit of time sharing some research that we did on what are customers' expectations in a post-COVID-19 Australia. What are they telling us that they value? What are they telling us that they are doing now? What are they telling us about how they're conducting business? So I just want to touch on that for a little bit. I'm going to give you an example of a product that we've already launched, just talk briefly about our product BizExpress, which speaks to some of the comments I've made earlier. And then I'll just move a little bit into a bit more of a product area. I want to talk a little bit about typical receivables or invoice finance propositions that are available in the marketplace. What do they deliver and where do they fall short? I would like also then to talk a little bit about our product Stream Working Capital and how we feel as an organisation that we speak to the pain points that customers have told us about when reflecting their experiences of using either invoice finance, receivables finance, factoring, whatever you like to call it. So yeah, talking about how the partnership with Intuit QuickBooks solves those pain points. I'll play a short video. It won't be a long one, only 2.5 minutes, but it helps to, I'll probably spend 10 minutes trying to describe it, and then the video will tell you in 2.5 minutes what I should have said in 2.5 minutes. So that we'll show that. And then just how might we work together? How might CommBank be able to support you as the vital, as Amanda so eloquently said, as the vital support network and the vital support community to your customers, and how Stream Working Capital might be able to support you in those endeavours. So let's talk a little bit about CBA, CommBank and strategy. So I've shared this slide from our investor pack. It's publicly available and anybody can go and have a look at it. But what are our priorities at the moment? Well, our priorities are to lead Australia in the recovery and transition from post-pandemic, from the pandemic. How are we going to do that? We're really going to focus in on by reimagining products and services. What do customers want to see? How do customers want to interact with their banks? And how do banks listen and respond to that feedback? One of the outcomes of that is we want to become the global best digital experiences and technology. We're investing a huge amount of money in moving digital, which in turn creates simpler and better foundations for that banking relationship. I'll talk to a slide shortly, which says, you know, what proportion of customers are now doing all sorts of things online, and where that trend is moving, and what we as providers and suppliers to the SME marketplace need to do in response to that. So why are we doing it? Why are we doing this? Well, if we just flick onto the next slide, what this slide just gives us an insight into is to what SME customers are using the digital environment for at the moment. You can see that if we go down to the bottom, looking at personal banking, you know, quite a lot of customers are using a digital channel to do their personal banking. Slightly less their business banking, less still accounting, as we move towards the right-hand side, interacting with suppliers, interacting with clients and customers. Now, this research is a few months old now, and I wouldn't mind betting that even that right-hand column now, interacting with clients and customers, there is a much higher proportion of SMEs who are now more comfortable interacting online because they've had to. We've all had to change the way in which we operate. We've all had to change the way in which we sell our products and promote our products because we haven't been able to do that face to face. But one thing this is doing is actually making us all more comfortable with that digital channel. If you would have said to me, or perhaps if you ask yourself the question, what would you have been comfortable doing online 2.5 years ago? It would be very different to what you're comfortable doing online now. And that is because, you know, as they say, the mother of invention is necessity. When we haven't been able to go out to the shops, when we haven't been able to go and visit our customers, when we haven't been able to go to our suppliers, we've had to find a different way of doing it. And the platform that we're on today and others like it have been the facilitator for that. But what it's really led to, in our view, is more and more customers, more and more businesses, more and more individuals being comfortable with that online channel. We can perhaps just move from that slide and talk a little bit more maybe about moving more into the product. If we bear in mind what's been said so far, which is really, we need as an organisation adapt to the changing environment. If we consider that people are becoming more and more comfortable with that digital channel, when we sat down, CBA hasn't had a receivables product for about 11 years. So I got together with CBA. I have 30 years experience in the receivables finance industry with a lot of companies around the world. I've operated in 4 or 5 different countries, started businesses, built businesses, grown businesses and sold businesses. And one of the reasons one of the things I said to CBA when I first came along is we need to understand what our potential customers don't like about the receivables finance industry. We need to reimagine, back to the strategy slide, we need to reimagine the product, we need to reimagine the service we deliver, and make sure that when we have this rare opportunity to put a new product into market, we really solve for these pain points. And here is a list. All I'd say about this list is that I've been running customer satisfaction surveys in the industry for many, many years, and the themes are common. The 3 predominant themes that come out when you group all of these things together are customers, especially SMEs, believe invoice finance is expensive. They believe there's a lot of work involved in managing a receivables and invoice finance proposition. And they also say there's a lack of transparency around how the facility operates. And those have been common themes of feedback over the years. So when we sat down to design, reimagine, use the phrase again, when we sat down to reimagine how a new proposition might look, we overlay that on these feedback or complaints, if you'd like to say it, with the preference and the movement towards a digital experience. That formed the basis of us saying, okay, what might our receivables funding proposition look like? So if we just flick to the next slide, the final point before moving into the solution is that actually, when we asked the specific question, if you had a receivables funding proposition integrated into your banking network and your banking platform, would that be seen to be an improvement on what went before? And the resounding response to that was yes, because we take some of those points. It wouldn't feel like a standalone third-party transaction. It'd feel part of the banking arrangement. It would be easier to deal with because everything on NetBank or CommBiz, which are our 2 customer platform interaction platforms, is easy to use. So we assume this is going to be easy to use. It integrates with our existing business banking. I trust CBA, so I trust what you're going to put out there is going to be really good for me and good for my business. I don't have to share that means I have a single source of providing my financial data to the bank, and the bank can use that to put in place a receivables finance facility, as well as my term loan, as well as my mortgage, as well as my bank guarantee, whatever else it may be. And it's also, one of the perceptions of some forms of receivables finance is it's the lend of last resort. And our customers believe that with a confidential facility integrated within the banking infrastructure, that would disappear. So we took all of that into consideration and we came up with stream working capital. So what is stream working capital? Well, it is reimagined receivables funding. And if you could just suspend for a second what you know and what you understand about receivables funding, that would be really good. Because what stream is not, it is not invoice finance. What it is, I would suggest to you, is a collateralized overdraft. And when I say a collateralized overdraft, I'll split that into 2 parts. An overdraft, we all know what an overdraft is. It's a facility on a bank account with a fixed borrowing limit. So what we've done is we've basically said we're going to work with partners like QuickBooks to extract data directly out of the cloud-based accounting platform to inform what the value of the receivables ledger is. So for an example, how we do that, is we would create an API, a link between our platform provider and Intuit QuickBooks, and the data feed is dynamic and real time. So it will tell us exactly what the value of the receivables ledger is. It will then apply an advance rate against that eligible receivables, and then that would overlay that limit straight onto the business transaction account. So what you end up with is a dynamic limit on your transaction account. You will have, so for example, in the scenario where we have a growing business today, there may be $100,000 worth of invoices. We would, let's say, advance 80% of that. So the customer would be able to have an overdraft in their suite of products within CommBank of $80,000. Over a period of 3 months, they acquire new customers. They've got a new product and they are growing. And therefore, in 3 months' time, that value of that sales ledger has increased to $150,000. Automatically, the overdraft limit or the stream limit will have increased to $105,000 in that particular instance. Sorry, $130,000 in that instance. That's 80% of that 50%. Which my maths is not playing up with me today, but that should be 40,000 more. So that's 120,000. So what you have is a dynamic availability, and this is displayed through NetBank or CommBiz. So the customer dials onto signs onto their banking platform. They click on their stream account, and it shows them what their borrowing limit is on their transaction account. So it is a dynamic, real-time overlay onto their trading account. But yes, absolutely, it's based on the fundamental principles of invoice finance, which is you get 80% against your available or your approved debtors. It's just the mechanism of calculating that balance and the way in which that balance is displayed is so much easier, so much more transparent. Whilst all this is going on in the background, the data that has been made available through the API with Intuit QuickBooks is also used so that we can monitor the cash payments or the debtor remittances that are coming in. So we can see at all times when cash is being received, when cash is being posted to the receivables ledger, and it also flicks up quite a significant number of risk alerts. So, you know, with receivables funding, there's certain patterns of behaviour that we would see, which would suggest there may be some suspicious activity going on. All of that from our point of view, not from your customer's point of view. A customer doesn't have visibility over that, but in the background, we're seeing all this analytics that is provided through Intuit's data feed, informing us as to making sure the conduct and the performance of the receivables ledger is in order. But let's focus back on the customer again. That's what's important here. The customer's experience is all they have to do is keep QuickBooks up to date. That will automatically inform the overdraft limit that is applied to their transaction account in Commonwealth Bank. That's it. There is no sending off to us copies of invoices. There's no sending off to us, no monthly reconciliation. There's no need to send copy delivery notes, anything like that, because everything that is stored on the QuickBooks accounting platform is available to us through the API link. So all of the work involved in receivables funding traditionally, that's all done by the platform through the data link with QuickBooks. So if we go back to those pain points again that we started off with, let me just remind myself what I said. The pain points were there's a lot of work. No, there's not a lot of work. All you need to do is keep QuickBooks up to date. There isn't any transparency. You can't see what's going on. You can absolutely a single sign-on to the CommBank platform. You will see all of the transactions reflected back from the QuickBooks inputs that have already been made. The third one, expensive. Well, no, this is a digital solution. We've taken the people out of this. We've taken the need for manual intervention out of this. Therefore, we've been able to take a good proportion of the costs associated with providing invoice finance away. So those 3 pain points have been solved by reimagining invoice finance or reimagining receivables finance and using the Stream platform. I'm just going to pause there for a second because now's the time to play the video. It's going to paraphrase in 2 minutes, as I told you, what I've just taken 10 minutes to waffle on about. So perhaps if we could play the video and then I'll come back.
CommBank has developed a completely digital working capital finance solution that releases cash trapped in your invoices to help your business grow. We know that having a healthy cash flow is the key foundation of every successful business, and most businesses experience fluctuations in their daily cash flow. So fast access to a regular stream of funds can help you capitalize on opportunities and maintain your stable foundations. Stream Working Capital is an intuitive digital working capital platform that securely links to your cloud accounting software. You can unlock cash tied up in your trade receivables with access to capital secured against your outstanding invoices. With a quick and easy online application process available 24 hours a day, you'll have funding available to you when you need it. Let's get started. It's simple and easy to set up. You just need to give us a few details about you and your business. Then simply connect to your accounting software. You'll instantly see a potential credit limit, and if you're happy, click Accept. We'll then get in contact with you to finalise the legal documentation and any outstanding approval requirements. Once approved, you can explore Stream Working Capital dashboard to select which of your customers' invoices you'd like to include. Credit limits are tailored to your business, and your available limit will rise and fall in real time based on the value of your current outstanding invoices. The more customers you nominate, the higher your available limit could be. Use as much or as little as your business needs, and only pay interest on the amount you draw down, with interest calculated daily on the outstanding balance. Your loan balance is then automatically adjusted on a daily basis based on your customers paying their invoices. Stream Working Capital can help you manage your cash flow so you can focus on your business.
Way of assessing credit, which is looking backwards on historical figures. I'd say using a rear view mirror. We tend to look forward. We tend to look at what are the plans for the business, who are the customers that the business is looking to engage with, and what's the growth going to look like. So we are able to help newer start businesses. We are able to, we do want 6 months trading, but we are looking to be able to fund relatively new businesses and provide that vital working capital or cash flow that Amanda was talking about earlier. The digital application is simple and easy. There is no, as the video said, you get a very quick indication as what the limit is likely to be by doing the analytics on the last 12 months worth of sales ledger information and putting in a growth factor. So that initial indication is then worked upon with the specialist, who will get in contact and come up with a structure for a facility that is acceptable. So in closing, really what I wanted to just talk about quickly is how can Stream Working Capital help you and your customers with their cash flow needs. Of course, the first thing I'd say is all of the tips and ideas and suggestions that Amanda came up with and made, I completely agree with. We do what we can to optimize cash flow, organic cash flow. But of course, we all know that businesses need working capital to be able to thrive. And Stream Working Capital is one solution which we hope you can use and you can advocate with your customers. Your customers who use QuickBooks platform can easily integrate and apply and have their dashboard displayed through the CommBank site. We do require a customer to have a CommBank transactional account to be able to provide the facility. That is not to say they need all of their banking with CommBank, but we do need that transactional account. The platform is accessible 24 hours a day, 7 days a week. So at any time, the customer can dial in, log onto their platform and see what their borrowing position would be in order to then say, can I make that purchase? Can I make that? Can I buy in bulk to get a better price? That is always visible to them. And finally, as I say, it fundamentally solves those pain points we talked about earlier. You know, there's a lot of work. No, there's not. I can't see who's paid when. Well, yes, you can, because it's a mirror image of what you've put into QuickBooks already. The customer is controlled. They don't have to get their debtors to pay into a different transaction account. It's their same trading account that they get the customers paid to. There's no trust accounts involved. So those pain points we solve for. We'd be delighted to work with any of you if you'd like a little bit more information. CommBank are dedicated to evolving and improving the proposition. We're 8 months now since launch. The customer feedback has been excellent, the majority of which are saying this is so much better, easier and more transparent than other receivables finance propositions we've used in the past. So the digitizing of the experience, the reimagining of the product is resonating with our customers, and we really are now looking to scale this up, and with the support of yourselves as advisors to the SME community, we'd really like to work with you to affect that. So that's me. Thank you very much for listening. At this point, I'll hand back to Steve.
Thanks, Mark. That was fantastic. And also thank you, Amanda, for sharing how both QuickBooks and CBA with our partnership with Stream can help our advisor community support their small business customers. I think just quickly in summary, Amanda, the impact that you shared with the data around the importance of the advisor and the role they play, I think everyone in this call knows that, but it just reinforces the need for both our businesses to support our advisor community, and obviously the power of the Cashflow Planner in helping our customers and our advisors understand how their business is performing. And Mark, I think it was really powerful around how easy Stream is to use, and how it actually provides that critical finance for our customers when they need it. And having been a banker for many years, I think we all know that it used to take several weeks or longer for customers to access finance. This is such a much easier experience for our customers, which is so exciting. So we've got several minutes left for some questions. We've had many great questions come in. So if you've still got any more, please submit those questions at the bottom right of your screen. But what I might do is just kick off with a couple of questions for Amanda, and then Mark, I'd love to dig a little bit more into Stream. So Amanda, a question that's come in, does the Cashflow Planner tool cost extra with QuickBooks, or is that included in the subscription?
That's a great question, Steve. So that is included in the subscription. So it's available on the platform that you're currently using. Most importantly, the key thing is to ensure you start to get that out to your customers and start to expose them to the power of that tool. And there's a whole space that we can unpack at some other time about how do we ensure we monetize this and commercialize it for the accountants. But certainly to know that it's there, it doesn't cost anything extra to use. It really should be something that that is starting to become part of the regular workflows of your small business engagement.
Fantastic, thank you. And to follow on from that, like as an advisor, how would I introduce the Cashflow Planner to my clients?
Yeah, absolutely. So, we are coming up to the end of the financial year. There's tax planning that is normally a bit of a look-see as to how you're progressing and where things are coming up to. This is a great tool to get a sense of what cash is going to be available to help with minimisation tools. And also, there's often a sense that the right client might be the client that's in distress, but believe me, that is absolutely not the case. Cashflow planning is going to be relevant across all your base, and being able to show the power of what it can do with your clients is going to be the precursor for the conversations that you can have. They're going to shift the conversation topics from compliance and inputs to really future forward planning. So I would highly recommend it. It is something that you're introducing slowly, but with the power of what it can do, and start to create those conversations.
Fantastic. Thanks, Amanda. And Mark, just to build on your presentation, which was absolutely fantastic, can you tell us, you mentioned that a customer needs to have their transaction account with CBA, but do they need to be an existing CBA client on day one to apply for it? Could you maybe give us some insight into that? And obviously off the back of that, what is an ideal client for the Stream product?
Yeah, thanks for the question. A customer who is not banking with CBA would be delighted to hear from them. As part of the process, we would introduce them to a small business banker who would originate a transaction account for them to go through the KYC AML sort of process that you need to do that. There doesn't need to be any other product. Ideal customer, well, we start off with we'd start off by funding a sales ledger as low as say $50,000, and we'd go up to a sales ledger of $50 million. So it's the full gamut. The type of customer who is best suited is very similar to the profile for invoice finance. So it's a manufacturer, distribution, wholesale, manpower, logistics. Those businesses who have a trade, and it's the best way of, I think, of defining it is to say where there is a complete sale. So like you sell a box of widgets, and that is a complete sale. Where it gets difficult is when there's progress payments or stage payments in the construction industry, for example. So because if we fund a stage payment, it's not actually a perfected sale. It's reliant upon the other stages of the work to be completed before the sales become perfected. So from a legal perspective, we can't take full assignment, and the debtor isn't obligated to pay until the work is completed. So those types of customers causes a little bit of difficulty. But where there's almost, you can say, sell and forget. A box of widgets, a week for a person to do some work at a warehouse, importing cabling and selling it onto their customer. That type of simple transaction, that's best suited for receivables and Stream alike.
Fantastic. Thanks, Mark. Just to build on that, you said that it's for the ledgers from 50,000 to 50 million. Can you give us some indication of are there borrowing limits for the customers that are applied? How do you control that?
No, it's similar. So the minimum limit we'd probably do is about $50,000. So but what we tend to look at is, say, if you've got a $3 million ledger, and that would equate at 80% to 2.4 million. So we would probably say for that customer, we'd put in place a $3 million limit to give them some ability to grow. Because what we don't want to do is we don't want the customer to come back because they're growing and say we need to reapply for an increase. We want to move the limit up as the customer is growing, and providing the performance of the ledger is good, and we have all the analytics we need to assess the ledger performance because of the link through that QuickBooks provide. We would be happy to increase that limit, providing the performance of the receivable ledger has been strong.
Sure.
So
great.
we could go all the way up to $40 million limit, customer limit as well.
Okay, that should cover most of our customers. And just conscious of time, probably last question if I can, Mark, is with the current experience, how long would it take a customer to have that approved?
We would, so from the point that they connect their QuickBooks ledger to the Stream platform, it would be under 2 weeks. We're trying to get it quicker. We're in the early throes, so we're hoping to digitize the process in due course for credit approval. We're not quite there yet. That is what, and I forgot to mention, that's what our BizExpress tool does for overdraft. It automates the credit decisioning process, and that's what we're working on in the next phase, is to automate that credit decisioning process so we can get the money to the customer even quicker.
Fantastic. And we're working with you on BizExpress, so we look forward to bringing that to everyone in the near future as well. So look, just really conscious of time around. So Amanda and Mark, thank you so much for sharing the insights around QuickBooks and the Stream platform. Look, we're really proud of our partnership with CBA, and we believe it's partnerships like this that will support our advisors, helping their small business clients get access to cash flow support, importantly when they need it. Watch out for your inbox for a copy of the recording from today's session, some more information on QuickBooks Online Cashflow Planner, some information on QuickBooks Online Accountant, and more details around CommBank's Stream Working Capital solution. And again, thank you for taking the time to join us today. We look forward to sharing an hour of power with you again soon. And until then, please stay safe.